Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Well, today this happened. Lyft dropped more than 30% in a single day based on earnings. So in this video, we need to describe everything that happened, and the most important thing is what should you learn as an investor, not just for people who are invested or interested in Lyft, but just a general investing lesson, especially for beginners, but even for us seasoned investors. You need to learn an important lesson from this earnings report. All right, so Lyft, those who don't know, is one of the biggest competitors to Uber. It is a ride-hailing service. Basically, you open up your app, you order a car to take you from point A to point B. I think everybody knows that. The problem, though, is that Lyft has not been profitable through its entire existence. This is well known. It has been well known for the entire existence of the company, and especially once they went public. To show you how bad this thing has gotten, and the reason why they dropped 35% a day is because their losses have increased 300 million from one quarter to the next. And for example, and I'll pull this up here on my phone because I was doing research and looking at this earlier, in 2021, okay, so Q2 of 2021, they lost 240 million in 3 months. Okay, in a single quarter, they lost 240 million. It's bad, but not the worst thing in the world. But then when you move to Q4 2022, so just 3 or 4 months ago, the last quarter of last year, they lost $596 million. You go from losing $200 million or so to losing almost $400 million in a time where you have more people riding than what you did last year. The math is not mathing for a company like this, and I think you probably know what the biggest reason is. Drivers. It costs to have actual people drive these cars, and the margins are really thin. Think about it. If it is a $20 Lyft for me to get from my home to the airport, how much money is Lyft really making after you pay the driver? Which you should do. I mean, they are the company essentially. So how much are you really making, right? That is their issue. And their entire thing, right, is that autonomous driving is going to be a thing that saves this company. And that's true, right? If you don't have to pay the drivers, you can just have robots drive people from point A to point B, you're good. The issue here is, how far are we from autonomous driving? Like, really think about that. How far are we from that? How long has Tesla been promising that? And how long is it going to take for this company to afford to do that and then roll it out on a big scale? Is this the Jetsons where, we can do this tomorrow? Or is it going to be another 5, 10, or even 15 years before you get autonomous driving, before it's on the road, and before it's approved for every safety measure there is that's out there? Like, I think we are years away. I don't think this is something that's going to happen before my kids are in middle school, right? And they're 2 and 4 right now. That's a ways away. So that is the biggest issue. So what is it that you can learn as an investor? Number 1, earnings season. I've said that before. The majority of the companies, at least that we care about, really announce their earnings within the last 2 weeks or so. But this is one of the reasons why I say, if you are a swing trader, I don't really talk to day traders that much, but if you're a day trader, you probably don't want to mess around during earnings, because wild things like this can happen. If you asked me what I thought was going to happen on earnings, I wouldn't have thought it would have dropped 30% or more. Would it have swung? Yes, but like this, that's ridiculous. Very hard to predict. The second thing is, look at the business model. Anytime that we discuss stocks on this channel, or anytime that I give, make a list or recommendations and all that kind of stuff, I always say, understand what it is you're investing in and understand the business, right? I always say understand the business. And that is why some stocks work and others do not. This is not a profitable business model. And when you consistently lose money, and you lose even more money as things get worse, you're going to find yourself taking on more debt, paying higher interest rates, and you're going to end up in this cycle. Is Lyft going to go bankrupt? Are they going to vanish tomorrow? I can't tell you. Would not surprise me if at some point Lyft no longer exists in its current state. Something has to happen, because you can't continuously lose hundreds of millions of dollars consistently and have those losses grow in 2023 now. It's a difference, right? In the pandemic, it made sense. People weren't trying to be no Uber and no Lyft. Makes sense, right? But now, It's a lot more open than what it was, and you're losing more money now than what you did last year, which is again a major problem. So lesson again, take a look at what your business does and does that business model work, and then really assess realistically what is that thing, right? That magic bullet, if you will, that is supposed to save the company or supposed to come in and really make things click. For Google and Microsoft, they think it's AI, right? I think that is obviously a lot closer to being here in its best form, or at least a usable form, than autonomous driving, right? Every company has a thing. For Netflix, right? It was how can we produce more content, get more people to buy, all that type of stuff, right? For Disney Plus, how can we find out the right pricing model? Some of these companies, these streaming companies, because they weren't profitable for a while, they either raised the cost or they did advertising, and that was the magic solution. That's one of the things that helped Netflix turn around. Most companies have a thing that they need to switch on or do to really fix the entire business. And for both Uber and Lyft, it's autonomous driving. I do not know how close we are to it. Yes, you can go read an article about what they're doing with Google and how they're really trying to get there, but take the time to really think about what it's going to take to get that done, to make it affordable, and for people to trust it. Because if you like me, right, you may not be comfortable just walking across the street with a whole bunch of automated vehicles, right? Now, I know people can't drive, especially in the state of Virginia, but this is something that you do have to pay attention to. And whether you are a voter, you in your local state, you can say, hey, we're voting against this, it's not going to be here. What if that starts to catch on? What if that's an issue for companies like this? So those are things that you absolutely have to pay attention to. Always understand what the business does, and make sure you're paying attention to reports like this and paying attention to the finances, which are things that we've been talking about all year long so far, and looking and saying, look, if you have to borrow that much money, right? If you're losing money, you got to borrow money to keep the business running, and you're going to be paying a whole lot more for it. That's not a good scenario and not a good environment for a stock like this. All right, so that is our lesson for today. I will catch y'all next week. Also, make sure that you join our members only. We have exclusive videos each and every week. I'll be dropping another one today. And you also want to make sure you hit the like and subscribe button. That helps me help you, and that's free. Okay? All right, I'll talk to y'all next week.